Again, welcome to Core Modernization is Non-Negotiable, 3 key ways to drive profitable growth in banking. Please welcome your moderator for today, John Craper. John?
Thanks very much. Delighted to be with everybody today and looking forward to a productive session. Today, we're going to be talking about modernizing core banking systems and as mentioned, why it's not just an option, but it's an imperative for future success of the banking industry for a number of reasons, both customer-facing and bank-facing. We'll spend a few days, we'll spend a few minutes talking in each areas. Part one, we'll talk a little bit about what the core banking system is, right? When we talk about a bank modernization and modern cores, what does that mean for you and your bank? We'll talk about the benefits. We'll talk about how you can unlock profitable growth, how you can identify operational resilience, competitive agility, things that every bank today is considering within its own four walls, and how best to be competitive within the next 10 to 15 years. In our second part, we'll talk a little bit about how to get started with a transformation, right? So how do we move from an old core to a new core, or from a legacy bank structure to a modern bank? And in our final part, we'll talk a little bit about Galileo and PwC, right? What role does Galileo play when empowering banks to implement a next-gen core? What are the Galileo offerings? And how does PwC support Galileo to that end? So before we get started, we'll do a couple of introductions, and then we will jump right in. So first, I'll introduce Mike Haney. Mike.
Hey, John. It's great to be with you all today. As John mentioned, I'm Mike Haney. I run product strategy here at Galileo, where we provide banking, lending, and payment solutions to a wide variety of players in the industry, including traditional financial institutions, as well as digital challengers and even non-financial brands. So great, will be great to cover these topics with you all today.
Awesome. Musi.
Thanks, John. Hi, everyone. Musi Qureshi, partner at PwC, focused on our financial services sector. And in that role, I spend a lot of time working with the largest financial institutions, both here in the US and globally, as well as regional banks and some credit unions as well, thinking about that path to modernization. What does the transformation journey look like? Thinking about it strategically, and then in many cases, we are knee-deep into the delivery and the execution of those transformation strategies, thinking about modernizing the bank and then actually executing on those as we speak.
Fantastic. And I'm John Craper. I'm also principal within PwC, focused mainly on modern bank enablement in conjunction with our partner alliances like Galileo. I've been in retail banking advisory space for about 20 years or so. We've seen quite a bit of massive changes with the introduction of cloud services, SaaS offerings, heightened regulatory landscape and scrutiny, and innovation daily across the customer value chain. So delighted to be talking with you. As Musi mentioned, we spent a lot of time with a lot of banks, and I'd even add banks large and small, not just the big banks looking to modernize, but the small banks looking to, and other disruptors looking to pave their way within the market. So we've got a lot to talk about today, and we'll bring some of those examples live as we get into this. Mike, let me first ask you, it feels like a pretty basic question. When we talk about core modernization, talk to me about what the next gen core is, or what a lean core is, right? Those buzzwords that we hear in the market.
Yeah, absolutely. I'm actually going to start by defining what a core banking system is, given that it doesn't frequently change in most banks over the course of one career. A lot of people either forget that the core is sitting there in the background, or may not think about what role it plays for the traditional financial institution. Typically, if I talk to my family who has no idea what I do for a career, I try to explain it that this is where your accounts live. This is the home for your accounts, whether they're deposit accounts, like a checking or a savings account, or a lending account, like a personal loan or an auto loan, let's say. That's really the home of the account. And officially, we call that the system of record or the ledger for your accounts. And we surround these accounts with day-to-day account and transaction processing. So debits and credits of all types, you're paying bills, you're paying your friends, you're receiving your paycheck, et cetera. Those are the types of transactions that we're talking about, plus transactions that the bank will take on your behalf, such as, posting interest or a fee, and the moving the money between these different accounts, like paying your personal loan monthly payment from your checking account, as an example. And of course, various account servicing transactions. Perhaps you change the ownership of the account from when you were single to now you have a joint account with your spouse, for example. So really, this is the heart of the bank, and this is really where those accounts live. And it's such a sensitive area, of course, because if you make a mistake in day-to-day balances or the posting of transactions, you're definitely going to hear from probably your customers as well as regulators and even maybe the press. So it's such the heart of the bank. Now, what makes these next generation systems modern? Sometimes we call that generation 3. What is that all about? And it starts with a technology definition, right? Most of the next gen cores, including the ones that come from Galileo, adhere to what we call MACH principles, M-A-C-H. M is microservices. These tend to be the basic building blocks or Lego blocks that we build these modern systems out of. They have wonderful attributes around accessibility and reusability that make you, have this library of functionality at a granular level that you can build into more sophisticated types of services by putting them together and reusing them across your core banking platform and beyond. The A is for APIs. This is obviously the modern way. We're in the so-called API economy, right? This is the modern way, not just to connect with systems inside the bank, but increasingly with systems that are outside the bank, and to ease that whole integration, which leads to ease of orchestration. And eventually, as we move into more of an event-driven world, to be able to trigger or respond to those events as they happen in real time. The C is cloud. Why is cloud important? For banks, it helps them change from a CapEx mindset to an OpEx mindset. We get the elasticity of the cloud. So that's on-demand or utility-based way of thinking about accessing computer processing power or computer storage, and be able to completely get out of the data center business, which a lot of the, especially larger banks, have been in for quite some time. And then the last is headless, right? The headless means that no longer do we feel sort of obligated to shove, whether they're digital self-service channels for your clients or whether they're staff-facing channels like CRM systems and other servicing systems, that they have to be tightly coupled and embedded. You can choose the elements of the front-end systems that you want by having the back end be what you want. And so the headless and the API often go together in this story. And we're going to talk later in this conversation that the technology is only the beginning of this generation. It's really about what does the technology enable for the bank, for the clients, even for the vendors. And we'll get into more of that later. Now, your second part of your question is that most, if not all, of these next-gen cores are what we call lean. And again, that kind of goes with the headless concept, but even more. We no longer expect the core to be every system that the bank needs to be the bank. Right? Again, it focuses on that storing of the customer account and being that system of record and being, extremely reliable in terms of posting all those transactions. So we now have technologies that could be workflow based or data management based or all kinds of different technologies now where we pull things out of the core and put it into best of breed systems that come from elsewhere. Doesn't mean that one vendor can't have all those solutions. We just no longer force them to be part of the same tech stack or part of the same application. So let me pause there because that's a long-winded explanation of what a core is and what makes it modern and lean. And we'll move on and talk about the benefits of that.
Well, and that's a really good point, right? Like these older cores are fairly large, monolithic, and for banks to be able to kind of have what they want, configure what they want, that configure is really not the word. A lot of custom development coding on top of a lot of these older legacy platforms in order to provide the bank what exactly they want. So, those I talk about the legacy platforms that they are quite old. We have some colleagues of ours that are much older than us, and they are still younger than some of the oldest core platforms. Musi, when we start talking about modernization, and again, we're having this conversation with a lot of different financial institutions today, what's it coming from?
I think the conversation is largely technology driven, but not just the technology. And Mike alluded to this right at the end. The operational implications, the business implications are just as important. Is it possible to absolutely do a system swap out, take out a legacy core, put in a lean next gen core? Sure. But I think more and more, we are advising our clients, and a lot of financial institutions are realizing that the benefit of modernizing the core doesn't stop with just the technical benefits. All of the operational benefits, all of the business benefits are, I think, frankly, have been understated until relatively recently. So thinking about, as Mike mentioned, if things like workflow, et cetera, are outside of the core, we're letting the core be the system of record and the ledger, but everything else is sitting in best of breed systems. That really frees up the business to make different choices. Can I make a different choice around my front end online banking mobile experience? I can make a different choice around how, frankly, I use my resources and talent. They're not just looking at reports off of a batch-based process and thinking about processes differently. And so more and more, I think the conversation is technology plus. And that's been a really interesting, I think, a shift in the, I'll call it core modernization or bank modernization journey for many of our financial institutions.
Yeah, and a lot of our financial institutions, right? I think about the 20 years ago going into a branch and needing to open up a deposit account, and I spent ages in that branch opening up an account. And then if I wanted to go open up a car loan or an auto loan, right, had to go speak with somebody else. And when we think about our idea of a modern bank today, it's highly customer centric, right? So not having, 3 or 4 different redundant processes to service customer, how do we best minimize the number of touches for for somebody like you and me, or for some of our other clients, right? That are quick, that are efficient, that don't require a number of different platforms to solve the same, the same action, the same activity. And I think, the challenge is a lot of these consumers are saying, I'm not going to stick with a bank that can't give me what I want right now when I need it. So the ability for a bank to be agile and pun intended, but the ability for a bank to be agile and to absorb customer needs and action them quickly is becoming a more increasing challenge with the legacy architecture, right, Mike?
Yeah, absolutely. We kind of boil down the trends that are influencing modern system design into a couple of areas. The first one, which we've touched upon, the whole composable concept, right? About how I can take something that exists at a more granular level, these so-called microservices, and build up the products, the journeys, et cetera, that I want. Connected is also related to that API discussion we were having. How do I make these systems more easily talk to each other and ultimately talk to the clients and the bank's staff? Insightful, it's all about data, of course, these days. Can I make it easier for both the bank and the client to get data out and in? And so I can do that more advanced analytics, advanced decisioning. It's all about AI, right? You can't do AI without this data. And then you spoke lastly about agility, right? Agility is obviously the speed at which the bank staff and the client can move, in your example, account opening, but also agility for change, right? And how the bank continuously adds new capabilities, changes the experience, and being able with these modern cores to surround it with the tools and procedures that we need to support a sort of continuous integration, continuous development mindset, the so-called CI/CD mindset, right? And the low-code tools, the development environments that foster that change and make it easier and faster. We no longer, by the way, want technology. I'm an ex-banker. I worked in the in-house technology department at many large multinational banks. We were always the long pole in any kind of change program, whereas marketing or business operations or somebody else always could move faster and were waiting for us. We want to change that paradigm with these new systems and these new architectures, and with just embracing this new way of working.
Yeah, and for some of those larger multinationals, right? Sometimes making small incremental changes is sufficient. You know, in the market, it's no secret they have the lion's share of deposits. But in the last few years, some of these entrants and disruptors, they've captured ways of taking some of those deposits away, right? We're in a low margin business, so you know having quantity matters. You know, we've spoken with some banks that exiting the pandemic, some of their business models, whether it's in commercial real estate or the like, their business models changed, right? And they need different ways of securing new revenue to stay viable within the market. And so it's an imperative. In some cases, it's continuing to change. I mentioned before the regulatory constraints. You know, there's a lot more scrutiny, and there's countless organizations today that are bandated together a lot of times with manual reports and you know, augmentation of staff to support a lot of the scrutiny that continues to increase. So having accelerators, having a means to manage that more efficiently, so that you're not taking away from the business of innovation, that you're actually you're focused on that because you've solved for or mitigated much of that other spend and people burn. It's critical. Musi, think about like some of those other benefits, the things that, you know, we spend a lot of time talking to our clients. Everybody has a different reason or a different driver for not just modernizing the core. I know it starts with the core, but when we think about bank modernization, you know, what are some of those benefits that we've shared with banks as well?
I do think we shouldn't understate the need and the imperative of modernizing the tech stack, right? So I did say, of course, there are lots of other benefits. I think with the technology itself, and Mike mentioned all of the elements of the new tech stack, there's also a human resource element to that, right? So many of our banking clients are finding that the resources that exist today, those who have brought us to this point, may not be the ones who will continue on the journey with us forward, either because that skill is rare, right? Those who've worked on mainframes, there aren't that many folks. So it's a limited pool of people who can work on it. And frankly, new, younger talent may not want to work on that kind of technology. So we have a lot of people who are eager to enter the banking and financial technology space, but they're interested in working with more new and modern technology. So I think that's an important one, to harness that as a benefit to the organization. I think you have to deploy new and exciting technologies so people want to come work at your financial institution. I think that's a really important component. And then, of course, there are benefits to the business, and I use business loosely here, but the business, the operational teams, all of that, the speed at which changes can be made by embracing new cores and the technology that we were just talking about, the ability to say, you know what, we see a turn in the market and the ecosystem, the environment requires us to either introduce a new product or think about changing pricing. That used to be, you know, 6 months, a year. It's a long time to get some of those changes into market because the technology was the long pull. But now I think business and ops teams can think about things like more dynamic pricing, using that real-time data that comes from the core in a much more flexible way. If I can see data that's more real-time, I can you know, draw insights from it and present that to my client. And it doesn't have to be, you know, once a week, once a month, but it can be in the moment when someone's either on the phone, in the branch, however they're interacting with us. I think those kinds of benefits, we're starting to see that. And a lot of folks are using those kinds of use cases to figure out where to start their core journey. I know you mentioned, John, we're going to talk about that in the second half of this conversation, but I do think thinking about what's the business benefit often drives the implementation approach. I'll say is if we're trying to offer something new in the market, that might look different than someone who is trying to maybe stop the bleeding on the technology front. So I think the what you're trying to drive will naturally drive the how you do it.
Yeah. And I think, I mean, I think core modernization, right? It allows us to innovate faster, both internal to support the bank employees themselves, as well as the customers. But Mike, maybe you can tell us a little bit about, a modern Gen 3 core. What are some of the distinguished differences, within this modern banking architecture, that maybe help enable, some of that agility with not just with the customers, but the bankers themselves?
Yeah, absolutely. Actually, I want to pull on a thread that PwC started to bring up which is, as you're building the business case, one of the dimensions to always think about is this concept of risk. And risk, one of the interesting things that she talked about, right, which is also being discussed with a number of banks that we talk to who are on 30-year-old plus legacy platforms, is that risk of my system is undocumented, my staff who's supporting it is retiring, and no matter how much money I throw at them, they're unwilling to come out of retirement. Handing it over to a system integrator that still understands, let's say, COBOL on mainframe or similarly old technologies is really expensive. So there's a dimension of like, if I wait too long, I'm suddenly putting the bank at risk. Secondly, regulators are starting to take notice, right? They're starting to scrutinize the age and brittleness of the infrastructure of these, possibly 200-year-old very large banks, especially here in the US, and saying your infrastructure is now posing a risk to what you need to do, what we expect out of you. Another aspect of what's beautiful about some of these modern cores, right, is that we can a different dimension of risk. We can embed regulatory compliance, risk control frameworks at the deepest level, at the microservice level of these modern cores, or even in the APIs of these cores. So you can now start to think about legal and regulatory compliance at more fundamental levels. When we talk about risk of staffing again, now I can transfer, because more and more of these cores are becoming managed services, as opposed to something I have to deploy in my own environment. So I can transfer some of that, risk of lack of talent and expertise to my vendor provider. And then there's also just the risk, right, of keeping up with the competition, right? Again, you brought up that concept of agility. Well, a lot of the digital challengers, many of which are now getting banking licenses, right, have been able to launch new capabilities at much faster rates because they aren't restricted, right, by these legacy systems or lack of talent, and they're getting things more out of the box from the vendors that they work with, or how they're developing. So we're going to talk today about a number of different rationales for core modernization, but I think risk in a number of different dimensions is something that really can help drive the business case forward.
There's an inordinate amount of money spent each year on ensuring that compliance of a bank is up to snuff, right? This is just think, even if we took 30% of that and we're able to redirect it to, I keep saying, is innovation, right? But the ability to adapt to the market, build new services, identify new custom products or offerings that is new in the market. There's no telling what a bank could do with redirecting that money and saying, I've got an efficient way and a mitigated way of doing that from a compliance standpoint.
Yes.
And the other thing is, right, like when we talk about the speed, traditionally, as PwC mentioned, it can take up to 9, 10, 12 months, right, on a product roadmap to traditionally deliver to our clients what a customer is looking for. With the modern architecture, this basically allows us to respond to those needs quickly. And not only that, it's not necessarily relying upon a technology team to do that, right? The front-end bankers themselves have new opportunities and new ways of building a lot of those services or offerings, or customizing those needs particular to an individual customer, as opposed to needing to follow a very long chain that's IT driven. Talk to me a little bit about that, Mike.
Yes. So I think the question is around how do you shift the business case from being IT driven to more business case? And I think there's a couple of ways to address that. First of all, I've never seen a core transformation program succeed without the business side of the bank supporting it. And so you have to get them involved early and often to create that momentum. Also because they're often the ones paying for it, right? We tend to see, especially in larger banks, this silo between the business side and the technology side, and it's only connected at the CEO level, one side being rewarded for revenue, one side being rewarded for containing and controlling costs. So we want to create that partnership early on because, again, the business side doesn't tend to interact with the core directly on a day-to-day basis, so they sometimes forget it's there, for lack of a better word. So one of the things that we do when we create the business case is try to not just replace like for like, right? Because what tends to happen then is that your business case is solely around total cost of ownership and how that is now shrinking with your modern core. Yes, the business enjoys higher profit margins because they have a lower cost base, but what you really want to do is help them create something new so they also have additional revenue streams. Now, that could be, something new could be many different things, right? Obviously, a new product. Many banks are starting to get into the buy now, pay later wave. So that could be an example. Banks are trying to extend beyond their branch network. So they're often launching what we call digital sidecars to reach customer segments that are outside of their traditional base. That could be if you're a regional bank in the US and you want to go coast to coast, you can do this digitally. Or if you're a single country bank and you want to go to a new market, you can launch a direct or digital bank in those markets on a modern core platform. Or it can be like launching a completely new business. More and more banks are getting into that partner banking or banking as a service to power those challengers or to power non-financial brands. So we often want to build that stack on a modern core platform as well. So give the business something other than lower technology costs. And also, as I know we're going to talk separately about what a delivery journey might look like, but Big Bang is essentially dead unless you're the smallest of the smallest community banks, right? And you can complete your entire core transformation in less than 1 year. More and more banks prefer to do things in an iterative and progressive way. So design your program so that you're delivering business value. You're going live with at least some capability within a single budgeting cycle. That makes your business customers happy. They don't have to wait 5 years until the whole thing is done. And that keeps that momentum going so that even if your sponsor changes due to executive changes or whatever, right, that continue that momentum so that ultimately your old core is completely gone and replaced by your new core, but you're doing it in a way that's providing value along the journey.
Yeah,
and I think, Mike, to your point about that is how does the business get involved is if there is a compelling case, whether that's a new product offering, like you said, or whether it's doing something that's not doable today on the legacy core, something like that is interesting, it's compelling, it keeps the business and the technology teams in lockstep. So everyone's marching towards the same goal versus what you described earlier, which is one team's looking to reduce cost and the other one's trying to increase revenue. If everyone's marching towards the same goal, I think you get to an outcome that is much more palatable for all parties. And then, it's sort of a win-win all around.
Absolutely. And don't wait for your regulator to force you to make it happen. Make it happen early.
That's a good point, Musi. And actually, Michael, to pull back on a thread you were saying, right? So the ways that banks can modernize. So I was reading an article, I think yesterday or today. It was yesterday, just around modernizing your core, modernizing your bank. And you mentioned the Big Bang, right? The idea of ripping and replacing and having a nice, long, massive conversion that's complicated and full of risk. There's the one that you talked about, right? That we'll call it progressive and iterative, right? The ability to start to build a sidecar model, or something that is really parallel to your existing bank allows you to, and I think it's pretty de-risked, right? It's a simulate real time, stand up the capability to operate parallel, offer a new product, with this kind of progressive, this iterative view. And then there's the one mentioned, right, around just a totally new greenfield approach, right? Complete digital sidecar, going into a new geography. The sidecar is an interesting one. I mentioned the example before of, banks that have had one product set and their entire brand and identity has been one specific product set, and they've decided that's not us anymore. A lot of them are looking at that sidecar option, right? Is how do I take what capabilities I do have and slap something on top of it? And I say that it's way more engineered than that, but how do I slap something on top of it that allows me to go and build for the future and then decide on a full modern strategy? There's a lot of different ways to do it, and frankly, like over the last year and a half, I have yet to hear anybody say we're going for the big bang. It's the big one.
Yeah. And use this, we talked about using these greenfield approaches to, in one sense, make the business happy, right? Because you're creating new revenue streams by going after new customer segments or launching new products, et cetera. But it's also for the technology guys to test and learn, right? You might be working with a new vendor, an entirely new, so-called Gen 3 tech stack, and you might not yet be comfortable with that. And so these are ways to test and learn quickly, what we call fast fail and recover, and really adopt some of that mentality that came out of Silicon Valley, right? That we see with a lot of the technology companies out there. Banks can adopt that mindset in a sort of controlled manner. And then once you're ready, it's okay to let it, that approach to work or that new tech stack, let it cannibalize your existing business once you're, ready to do it. And then you can think about, remerging the brands if you're using separate brands or other factors to consider. But yeah, I think greenfield is a really, especially if a bank hasn't changed out their core in 30 years, this is a way to test and learn and get comfortable with the whole concept.
It's a pretty overwhelming or daunting thought when you hear somebody say we're modernizing an entire bank. For those banks that have a spaghetti architecture, that's a pretty massive undertaking. And so, this idea that bank modernization can come in different shapes and sizes, it doesn't have to look like one entire sweeping modernization where everything is in flux, right? There's what works for a $250 billion bank doesn't necessarily work for a $10 billion bank. Musa and I spent a lot of time talking with both, right? And how we, the art of the possible with a $250 billion bank is obviously a lot greater because there's much more investment and technology teams capable of supporting it. But that doesn't mean that somebody that's a $10 billion bank really can't execute the same or gain the same amount of effectiveness. You mentioned the fail fast, right? How do we get into a CI/CD, a continuous improvement, continuous deployment mindset? How do we build the heartbeat fast? Fail fast. A lot of the banks are focused on a 1-year investment. What's our budget like for FY24 or FY25? And they're not ready to say, sure, let me commit to a 5 or 6 year budget. I mean, 6 years ago, we were pre-COVID, right? A lot changes in 6 years that it's hard to commit that kind of budget to a modernization. So having a direct view of what you want to get to and what you want your future state to be, and chunking that up. Musi, I'd love to hear your thoughts, right? How do we think about what can modernization be?
I do think that's exactly right. Having those stepping stones is important, but I wanted to just call out that I think a lot of times my suggestion is always to think about what the end goal is. What do we want to look like at the end of this journey? And then we can work backwards into the baby steps. But having a line of sight to here's what we think the vision is for that future when we are either off of our legacy core or have completely changed what our tech stack looks like and what our business offering is. If we have a vision for the future, it might be bold, it might be hard to imagine sitting here in 2024, but I think being a little bit bold and putting a vision out there that's perhaps audacious, and then backing into it in a very measured and controlled way is how I would suggest doing it. Because both having that bold vision allows you to think about things that may feel uncomfortable today, but it's far enough out there. So let's think about that creatively. Let's have something that's aspirational. If we're just tweaking at the margins, then I don't think of that as a true modernization and a transformation. So that allows us to put the goalpost out far enough. But then I'm a realist and a practical person by nature. I think we have to be very thoughtful, as Michael said, what's in year one, what am I delivering? What am I delivering in year two? And that way you can ladder up to that really bold, audacious goal for 5 years out, 6 years out, with the knowledge that we're going to have some interim wins. I think that's my, that would be the one thing I would recommend, so that we can sort of meet in the middle. And it's not just, hey, we're taking only baby steps, because that doesn't feel like a true transformation. And on the flip side, just saying we have a bold goal for 7-10 years out feels not practical at all.
Yeah.
I would just add that that goal can be what I would call more attributes than something concrete sometimes. I know a lot of the internal bank, you know, how you create a business case or an expenditure proposal, you know, forces you to have quantitative revenue or cost numbers and those types of things. But I think what's more important is that, you know, to say in 5 years, I want my bank to operate differently, those concepts of agility, and I want a platform that can support that. You know, it's rarely a straight line between, you know, your 5-year vision and where you are now. You know, breaking that into pieces, not only to deliver business value along the way, but also to course correct. And you might be course correcting, your quantitative goal might be shifting, but your qualitative goal can remain the same, right? I want to be a more nimble, flexible, agile bank, or whatever your attributes are that will allow me to just completely behave differently, right? You know, so I think that vision is absolutely 100%. We need that, but recognizing the quantitative part of the vision might change, but not the qualitative.
That's a
I
great.
think that's well said.
That's a great point, right? Like the guiding principles, it's something Musi guides me a lot with our clients, right? Start first with those guiding principles. Oftentimes those can get lost in the shuffle, right? Especially in a multi-year engagement. Making sure that everybody is bound by those principles, and then deciding what those capabilities are that achieve that over time. It's really hard, you know, to secure executive buy-in and ensure that you're identifying what those benefits can be of those guiding principles year over year over year. So, you know, when we engage on these, and Musi, maybe you can elaborate a little bit too, when we engage on these types of projects, we really like to try to follow a pretty distinct approach, right? To ensure that really up front, those principles are hard and fast. It doesn't mean that some of them can't evolve, right? Or that can't manifest in different ways year over year. But those principles, going into those principles, it makes everything else from the capability to technology identification or decisions. It makes it a lot easier.
I think having the guiding principles and the alignment up front about who we want to be down the line is really important. Having the clarity of a vision, whether it's, you know, qualitative attributes, we want to reduce our cost to serve, we want to have different ways of working, we want to be able to have a platform that allows for you know, dynamic product definition and creation, whatever those qualitative attributes are, getting alignment on those after we get the guiding principles set in stone is important. And then backing into an actionable plan. I think if we can do it in that way, then you have a good harness to start with, but then you have a very detailed plan. And if the plan needs to change a few years out, that's okay, because in that plan, we should talk about interim wins, and you'll have delivered something. So it will feel like there's been success. Even if we're moving, it won't feel like a complete whiplash. And that's the thing to avoid. I think the thing to avoid is feeling like we are either going all in on a big rip off the Band-Aid, big bang core conversion. We don't suggest that. So instead, having sort of a laddered approach, a very measured, but sort of controlled approach that's anchored in some guiding principles, I think will make the whole organization feel much more comfortable. It de-risks the effort, but it also makes sure that you're making some strides.
It's a good point. You bring up measurement, right? So when we think about how do we measure the ROI, the investment we've said can be big, right? Multi-year, but how do you define ROI year over year? Mike, maybe you can elaborate a little bit on some of the different metrics that we think about. Again, when we start this, and we've done this, Mike and PwC, with other financial institutions where we're looking to help determine or justify or defend why is modernization necessary, and really it may be something that technology comes to us as a starting point, but really this case is something that should be driven, whether it's technology, operational, customer, like there's different metrics that we should look at for each, that to your point should also be a component of business case, but should also allow us to look at meaningful measurable outcomes as well.
Yeah, well, it always inevitably starts with that TCO concept, right? Total cost of ownership. What we want to measure, though, when it comes to TCO is not just the production environment. We call that the run the bank costs. Obviously, we want to shrink those as much as we can. We want to move it to a model where it's based on utilization rather than some fixed cost that represents peak capacity. One of the beautiful things about the cloud is that we can transfer some of those attributes, right? Like, if you work for a big bank, you might own your own physical data center. You might have to procure the hardware. Old school, I spent so much of my career thinking about peak capacity and wondering when I'll get that server delivered so I can install it and integrate it. Now with on-demand type of cloud capabilities, that dramatically changes how I think about production costs. But we also want to think about costs in the so-called change the bank. How can I make my projects happen more cheaply? How can I utilize tools where I don't have to spend as much time and effort coding or focused on extending or configuring the system rather than coding the system with fewer bodies, right? How can I even automate some of that? So total cost of ownership has to be looked at on both sides. The second dimension we always end up looking at, which is great for the business as well as for technology, is that TTM, time to market for changes. It could be a big change, like I'm launching a brand new product that I've never had before, but it could also just be that ongoing configuration of existing products. A lot of these modern core systems like Galileo's come with ways to integrate with externalized product catalogs with their own bundling and pricing rules, or they have their internal product catalogs that can be configured much more quickly just by setting a few parameters. I don't need a programmer to describe the attributes I'm looking for in my checking account. I just select a few things using a web-based form, and I'm good to go. So time to market is another key metric. But then after we start rolling it out, right, we start looking at, have I reduced my risk profile? Has this in any way helped with employee satisfaction or customer satisfaction? And the list goes on, right? Because now that I have this platform and I can release and change capabilities much more quickly, there should be a trickle-on effect ultimately, right? Not just to people, customers and staff, but also to other systems, because now those other systems can start to change as well, become more real-time, more event-driven, so this ends up being, your earlier comment about this isn't just about one system, the core modernization. It's really about modernizing the bank and how the bank operates, And you're going to find that just by swapping out the core, it's going to have this trickle effect on all these other systems and what they're going to have to change to now to take advantage of this new modern core.
I might say it with a slight spin on that, Mike, is it creates the opportunity for those other systems to change, right? It's not a has to, but it's a chance to.
Yeah, 100%. And they're already, and by the way, they're already changing, right? Your digital channels are real time. Your payments are becoming increasingly real time. I'm expecting very soon the Treasury and by extension the GL will start to become real time based on lessons learned from last year as we watched banks struggle with one of the oldest risks out there, liquidity risk. So we're going to start to see the fact that this modern customer core is going to have those spill-on effects to other systems and how they operate as well.
Financial metrics, operational process efficiency, the system performance, the reg compliance component, and then customer metrics, right? Our customer satisfaction, our customer growth, we can measure these way better now than we could 10, 15 years ago. And so the data has to inform very quickly how the business operates and how the business will do well, going forward. So, Mike, maybe we can switch gears. I know we've got a few minutes left at least here, but I mentioned or alluded to the fact that we've all worked together on some of these types of efforts as well. Talk to me a little bit about how we've partnered or kind of how Galileo has brought in PwC as partners through this journey.
Yeah, absolutely. So at Galileo, we focus first and foremost on the technology itself, right? These software applications like a core banking system, a payments hub, a debit card processing system, and so on. And we deliver them increasingly in a managed services type of capacity, right? Where we take on, together with our cloud partners, a lot of the day-to-day IT operations, sometimes called infrastructure management services. And that's, one of the things that kind of took us by surprise is how quickly over the last couple of years, even the largest of the large banks are shopping for managed services types of solutions. And it's even getting more granular than that. They're shopping at the API level. And by the way, that's something we're starting to see from the smaller banks, at least aspirationally. They too would like to shop at more of the API level. They're already, as a smaller bank using hosted solutions, but they want the freedom now to be able to select best of breed, much like their larger banking brethren. So this is something that is increasingly becoming common, is that they're looking for a managed platform upon which they can build experiences for their staff and for their clients, in a unique way, but not have to deal with a lot of the lower layers, the platform and the infrastructure, letting Galileo take that burden away from them. Now, of course, we've been talking this whole time about how do you begin? How do you create the business case for change? How do you manage a project all the way through? And it's probably multiple. We talked about progressive and iterative. It's probably multiple phases of the project. And the bank needs help in understanding their as-is state, understanding how the new solution they've selected from Galileo will integrate. And that's really where PwC can come in and do a lot of the things that the bank needs help doing from a change management perspective. Creating the business case for change, governing the overall program, doing a lot of the system integration work, data migration, and the other side of the integration from Galileo APIs to the bank's APIs and so on. So there's a lot of, we kind of maintain that laundry list of this is what Galileo does and this is what PwC does in order to bring a more holistic set of services to our clients.
And I'll add to that. I mentioned it with Musi, right? Each bank is built differently. So the needs of a $250 billion bank are different than an $8 to $10 billion bank. And so one of the things that's really cool about Galileo is the fact that you do have multiple different capabilities, a front end. You've got Connecta, you've got the debit processing, and then we've got obviously this huge core that's really, really cool. So there's a bit of a solution there for everybody. And part of what we like to do, and like I said, it's kind of the bread and butter that Musi has educated us all on, is how do we help define that for the bank, right? What works for one bank versus another?
Yeah, and I think that you touched on this. What works for an $8 to $10 billion bank won't work for a $250 billion bank. And so for everyone, it's a unique story, and thinking about what clients are we trying to target? What's the customer segment or segments we're trying to go after? Thinking about that first, figuring out what the current state of affairs is from a technology perspective, from a product suite perspective, and then crafting that game plan for each financial institution individually and making it fit for purpose for my bank versus your bank and so on is really important, because it's not a cookie cutter problem to be solved. And perhaps a smaller institution might say, you know what, I'm ready to make a bigger leap in the next 10 years, but in year one, I just want to make the tiniest, first step. I want to test something out. I just want to launch one product on a new core, and that's all I'm willing to experiment with today. I think that's an approach. Whereas a larger institution might say, you know what, we want to lay out the entire vision, and we're going to take a pretty hefty first step. Great. Let's do that. And so thinking through that, designing that game plan, and then starting that journey, that's the fun part.
It really is. And I think for anybody listening to this as well, if that's something that you're interested in, even just to understand, how could this work for me? We know we need a change, or we need to do something. Status quo, standing still, doesn't necessarily work for us, or maybe you don't even know. There are opportunities to modernize, and ways that Galileo can provide some of that agility. You're not beholden to just one platform with Galileo. Those are conversations that we would always be happy to have. We have different ways to Moosey's point, different ways. There's not one cookie cutter way. There's different ways to approach it. And part of the fun is putting together that jigsaw puzzle. So I think that's all we have. I know we're at time. We want to leave a little bit of time for questions. I do thank everybody for joining us today. And if you'd like to learn more, as I said, please don't hesitate to reach out. Turn it back over to the moderator. Any questions?
None that have come in recently. Oh, there's one that just came in now. How do we become a partner?
I think we need to define what type of partner we're discussing here. So at Galileo, we have a number of different partner types, if you will. We have what we call alliance partners. Example on this call today, PwC. They tend to be in the consulting or system integration space and help us with that sort of overall change program and creating the case for change. We have what we call product partnerships that bring capabilities that, for whatever reason, Galileo has decided not to build themselves, and often those we private label and sort of resell, so that our clients, it's more seamless to them to get multiple services through us. Of course, I mentioned one of our client segments are the so-called digital challengers or neobanks. They, of course, need a partner or sponsor bank behind the scenes. So we have a portfolio of over 30 partner banks in the mix. And of course, we partner with the networks like MasterCard and Visa. So there's all kinds of partners that we at Galileo work with today. Oh, okay. I see here. It's you are in the payment processing space, as are we. But yes, we'd love to talk to you to see if you're tackling different payment use cases than we're tackling, and maybe there's a logical way to partner up, and we'll get in contact with you. Oh, and also you're bringing up the geographic dimension. Yes, we are also very active, not just in here in North America, but also throughout Latin America as well.